Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Friday, our weekend edition of the financial markets for August 16th, 2019. And we're now in that funny time frame. We're after 3:15 p.m. waiting for 3:30. But this will be where the settlement prices come in on the stock indices. So let's applaud them. We didn't get a crash today. In fact, I'm tired. It was one of those days where by noon, you were pretty worn out, and I saw a lot of traders leaving. So I know that there wasn't a lot going on there. Bit of a bid coming back into the energies. Nat gas down a fraction. Grains had a bounce day. And bonds and notes, well, bonds gave back quite a bit. That's a good-sized break that the market had. So yields, the race to the bottom, well, it took a break with everybody else. Remember, we're still at August 16th. We got another 2 quiet weeks. Then everybody comes back to work and away you go. When we take a look at a monthly area chart of closes, other than this break that we had at the end of 2018, we've basically stayed on a monthly basis of closing prices now over for 2019 that number. So there's a definite upside bias to the market. Now, the weekly chart weakened. You can see how the market came back down. You're finishing off at 28,971, which is about 20 points underneath the 18-week moving average of closes. As we step into the weekly bar chart, we certainly didn't get as low as this last break low. We've come and had now a higher low, which is constructive. You've got a pattern of higher lows, higher highs. That is bullish. I had the swing line pointing there. I can now move it and have it point right over there. The other thing that happened is on this weekly chart, if you take a look at that 18-week average at 29.19, you've hit it now about 3 weeks in a row. So remember what I call that. I call the 18-week moving average of closes like I do the 18-day moving average of closes, the lines in the sand. Often, whatever the next trend that's going to develop comes from the market getting at that line and deciding from there what it wants to do next. Right now, the bias is down. Why is bias down? When you close under an 18-week moving average of closes, the close determines if the bias is up or down. Under it's down bias, over it up bias. And it's important because it can negate the bullishness of a swing line with higher lows, higher highs. So in this case, they do. So I'm neutral right through there. When I look at where the market went, last week it got to the lower Bollinger Band, held it, came back this week to that neutral line, that 18-week moving average of closes, and sort of stopped. So I'm going to call the market when I put on momentum pointing down, the bias down. The market held a key support number, went back to that 18-week moving average of closes, held it. If you fall again, the first support comes in at 27.89, secondary the 100-week average. If you rally, well then 30.48, the upper Bollinger Band, is the resistance. When we come to the NASDAQ, it's a very similar action. Last week we got down to that lower Bollinger Band, sat there. This week up to the 18-week moving average of closes. By the end of the day, we're at 76.12. The 18-week average is 76.64, so the bias is down, momentum is down, and unlike the other market, you have a higher high, lower low pattern, very much in the middle of no man's land. When we come to the Dow, you can see how the market had come down last week. This week rallies back up that 18-week average. I was on Fox at the beginning of, not this week, the week before when we had fallen, and right into this. And I remember saying right at the end of the week, I said, now the key is going to be how does the market rally and what do the major averages do to contain it? Well, we're seeing that the major averages, at least on the weekly charts, got up to that 18-week average and stalled. But the bias is down. The market, in this case, the trend is up, similar to the S&P, but bias down, momentum down. In the Russell, this is the uglier of all the charts, the ugliest one of them. It's got a pattern of a higher high, lower low, but it's total sideways action. So if this market started to break out to the downside from here, it could have the most severe break in terms of coming out with a pent-up spinning going sideways from this. Now, to know that's happening, you'd have to get under last week's low, and that could probably start the real bend in the market. As it is, the market has found support at the lower Bollinger Band, but the bias is down, the momentum is down. You don't have a trend. You have a higher high, lower low. In the VIX, as hard as it's been, I still think you've got people that are nibbling on the short side of the VIX here. Now, the problem is once you move away from zones that are 10, 12 in the VIX, and you get up to higher numbers, you get more volatility. And the risk of writing those calls becomes a lot more, much heavier burden to carry. The 18, well, let's start this way. The upper Bollinger Band number is 1942. You finished at 1847. So you can see how the market is paying attention to those traders that are doing that, but they're not getting much of a reward. If the stock market takes off, they'll get rewarded in that then you get the 15 to 1510 numbers, the combination of the 100-week moving average, and the 18-week, because we're on weekly charts. In the 10-year note, still very bullish, higher lows, higher highs, riding the upper Bollinger Band. The settlement today was 130.26. The upper band's 130.27. You're literally right on it. So you're not in excess in any manner whatsoever. TLT is in excess. TLT has come like a springboard all the way up here. You've got 1 week way over that upper band. Last week you finished at 140.05 over the band too. This week you didn't. 2 weeks in a row is not super excessive. You can go five weeks in a row. And then I get to the point where I say it's very excessive. But you got momentum locked in, you've got the bias up, you're just not trending, and that's because you haven't had a week where you've made a lower and lower. Are you watching that? Not one of these over the past nearly 2 months. In the dollar index on the weekly chart, you either hit the lower band, come back to the 18-week. You hit the higher band, you come back to the 18-week. You hit it here, you came back. So why would I change the thought process? The market's got an uptrend, higher lows, higher highs. Momentum's pointing higher, bias is up. I would expect that if you get to the upper Bollinger Band, the market runs into some resistance there and could pull back from that a little bit. Eventually, this might turn out to be a base. It hasn't yet. In the eurocurrency, it's the mirror image of the dollar. So when you hit the upper band, you went back to the 18-week. You get to the lower band, you go back to the 18-week. But overall, it's trying to break out to the downside. Now, there's bazookas. You heard the word I said, bazookas in the air that we're hearing about. As Mr. Rehn, one of the people that is on the European Central Bank Monetary Policy Committee, has been doing a lot of talking between Thursday and Friday, talking about LTROs coming back, more bond buying, maybe equity buying, lowering again of key interest rates by the European Central Bank, tiered type different other instruments they're coming out with. I think we're getting to the point where with Mr. Draghi's tenure coming off, Ms. Lagarde going in, I think that Mr. Draghi's history as a banker has been one that he's got never ahead of the curve. He's always been behind it. And I'm wondering if now fresh blood wants to get ahead of the curve at this point, and maybe that'll be his last act, because I think, I'm not sure, October 31st, it's when he hands over the reign to Ms. Lagarde. Mexican peso. Came down, didn't go anywhere, got a little bit of a bounce attempt, but you're in a market with a higher high and lower low, levels of resistance, and obviously what's weighing on this and the Canadian dollar to a degree is U.S. doesn't seem to be able to make a deal with them. Yet its own finances are not the best. They cut their interest rate this week, and it looks like they may have to cut it again. Their economy is slowing. In the Canadian dollar, what was that about in the last Canadian report, where the jobs data started to question everything? Are they getting ready to lower rates? Right now you've got a higher high, lower low, almost 3 weeks in a row, just fighting at this 18-week average, momentum down, but not really doing anything. You want to get bearish, take out last week's lows, then you'd have lower highs, lower lows. With the momentum pointing down, the possibility of the lower Bollinger Band comes into play. This pattern as it is, even if you rallied straight up, you still have a lower low. what are you going to do? Then get a higher high. Japanese yen, I think there's a problem right here. When you get to upper Bollinger Bands, I look for markets to run out of gas. What drove it could be a problem. Now I'm watching this momentum. The momentum has not yet turned down. 82 is still over 81.93. But when we reopen on Sunday night, it might start turning down. If it does, on this pattern, the most I'm looking for is the 18-week average of closes. Resistance, still the upper Bollinger Band. Bitcoin, on the weekly chart, it's still not bearish. We've had a correction. You can see that, but you've got a pattern of higher lows, higher highs. You have some divergence. You've got momentum still pointing down while the bias is up. Could the market reach for the 18-week average? It could. There's another Bitcoin coming out, by the way, that's going to be released by the owner of the New York Stock Exchange, ICE. We'll see if that has anything going for it. I wrote about it in Sunday night's report for other traders that want it. Remember, the Board of Trade didn't succeed. The volume in Bitcoins is not big at all. So far, the public has not embraced it the way they have. Give you the new E-mini contracts on S&P, Dow, Russell, and NASDAQ. Wow. You talk massive success, that's it. I mean, huge volume. When you take a look at Brent versus WTI crude, look at how the spread has collapsed. This is the lowest close since we were at 10.99. You got to go way back to find it different. So we are dealing with a market that is not worried about Brent crude coming out. A U.S. new pipeline opened yesterday, first day, 400,000 barrels a day out of the Permian Basin, and you got more coming online in September. When you look at the market, you see the bearishness. Lower highs, lower lows. Now that ship, by the way, that was carrying supposedly oil going towards Syria. Gibraltar's released the ship. The captain wants to resign, doesn't want to move the ship. The ship needs repairs. It's a mess there, but Gibraltar's no longer holding that ship. WTI crude, this is bearish, lower highs, lower lows. You bounced off the first challenge of that Bollinger Band. You hear me say it to you over and over. First challenges, I think pros take money off the table. But now, looks to me like they're willing to sell that market in the 57.93 area, take out this high right here of this week, which is 58.82, well, that would neutralize the downtrend, neutral it. It wouldn't turn the market bullish. You'd have another layer of resistance, 60.85. So in plain English, you got layers of resistance, not support here. In gasoline, you're done with the driving season. So now what do you do with gasoline? Because the strongest demand is behind us. The trend is down, lots of resistance between the 100-week average. I keep saying day, 100-week and the 18-week average. Bears have control of the market. Heating oil, same thing. Now, you know the distillates eventually gets a demand as the market shifts over because you're going to want to talk heating oil itself. But it's still a driving season, so you're using diesel. It's funny, but that's how it works. Lower highs, lower lows bearish. I think the pros are waiting to sell the market short there as well. Put it all together, an interesting time that we have. And I think I try to make it interesting for you starting early in the morning. I start a recording typically around 5:36 in the morning. I'm at home. It doesn't look the way this one does. By the way, that is exactly how my phone looks. You're looking at my phone there. And I record with the idea of trying to give you confidence in your own trades. Now, what do I mean by that? I don't know what you're thinking. I'm in a recording. But the idea is if you're wavering at all and you're saying, gee, this chart action looks like this, I wonder what somebody else thinks because the day's getting ready to begin the trading. That's why I do this so early. By that time in the morning, I've already checked Asia, I've checked Europe, I know what's going on, I know the reports that are coming out. So you're going to have me touch on the fundamentals. I'm certainly going to give you a lot of technical analysis, but the difference of the morning videos, number one, it's not out for the public. You're not going to YouTube to see it or other websites. It comes with points of entry and so on, but I can say buy here, sell there. Here's where your stop is. Here's your profit objective. This is what I think. And, you know, some people will say, well, you know, you're in and out of the market. I don't know. I just covered a British pound trade that I think we've been in 10 days or so. Futures markets, that's an eternity. So with the trade selections, you try to figure them out, you go into what we're doing here, and the idea is, in that time frame, and I hit the wrong button so the background's replaying, I'm going to review all of the commodity sectors, 40 charts with 5 ETFs typically in the morning. The videos run probably 15 minutes, but I make it easy. You don't have to sit there and wonder the sections that are coming in. I do them in the same sequence each and every time, no deviance on them. And the reason is there's a slide bar on the bottom of the video. As you grab the slide bar, bright, it lights up, because I know it's sleepy morning for us both, right? It'll tell you, are you in the metal section? Are you in the currency section? So you can slide where you want. And as you're going to see, I do this exact sequence all the time. You might want to know the energies. Why are you going to go through all the rest? You can do that. There's also a lexicon on the side of the page. Click the section you want, you're right there. Time is your enemy, but also it's not just time. You're trying to figure out, what should I do? Does that make sense with my own thinking? What does he think? And you don't get that. Who are you going to call early in the morning and talk about the market like that? Most of you don't. You want a discount rate to trade? Your broker's not going to be there to hold your hand to do that at that price. So what I do is at $7.95, I start you off for your first 30 days. After that, if you want to stay, and you can quit whenever you want, it's $15 every 30 days, no month to month. It's days at a time. You can even go for 360 days, pay it up front, $156, that's $13. Now think of what that is in the market. On the S&P, we're 2.5 points, right? Gold, you're $1.50 for a year. If you want to just try it, it's 26.5 cents a day. You can't get it's like the price of one Starbucks, you know? And you get to see it for the month. In addition, it keeps the show going. So if you'd like to give it a try, love to do that for you. Go to our website, and you'll see our new look of our websites up there. When you get there, you want to get under Education or Research, Ira's Morning Subscriber video. Sign up for it. I thank you ahead of time. Pays the bills. You have a good one.